So let's jump in. So, one of the first things you need to consider is, what does your firm look like? Do you anticipate that you're going to be registering with one or more of the states or the Securities and Exchange Commission? And, primarily that will be dictated by your asset size or some of the services that you're offering. For instance, if you are the advisor to a mutual fund or other aspects, and apologies for the phone here, guys. If you are an advisor to a mutual fund, you will be required to register with the SEC. Otherwise, if your assets are generally $30 million or less, you will be a state-registered advisor with kind of a swing range there from 25 to 30, where you have the option of either going with the SEC or the states. So one key thing to kind of point out is if you are a state-registered advisor, you essentially have multiple regulators if you are doing business in more than one state. So I'm in Massachusetts here. So if you're in Massachusetts and you register in another state, that other state is also your primary regulator. So you have two people that you need to answer to. From a practical standpoint, that's not that big of a deal. But just recognize that there's a lot of differences from state to state in terms of the requirements, as well as the burden of making sure you're keeping up with all of your ongoing requirements in each state. From a registration standpoint, there's some core documents and processes that you'll need to follow. You're probably all familiar with the various forms. But if you're not, the SEC website has a lot of good information, as well as our website, adviserassist.com, and it kind of distills the details behind each of these. But generally, Form ADV Part 1 is going to be filed online, and it's really the background information of your firm that the regulators require for mostly statistical purposes. Part 1B is state-specific, and that requires additional information that various states will require in terms of registration. The Part 2 is really the meat of all of this here. Your Part 2 is also referred to as a brochure, and that's going to be handed out to each of your clients, and it has to be provided to them at the onset of an agreement, as well as offered to them at least annually. The Schedule H is less common with a registered investment advisor having a wrap brochure, because generally what it does is allow you to package up fee-based accounts. But as an advisor, you often can do that without having to go through the process of a wrap brochure. From a timeline perspective, generally the states and the SEC have 45 days to approve or deny an advisor's application. And, of course, the regulators are there to protect the interests of the public. They're not there to prevent you from getting registered. But, of course, they need to go through all of the various paces in terms of validating your business model, your disclosures, the potential risk that's out there for you to do business, and certainly to make sure that you don't have a background that would put the public in harm's way. So that's generally why they have the 45-day window. That said, seasonally, sometimes they're much more swift than 45 days, but you really want to build in a timeline or a cushion. So if you're going independent, you really want to basically bake in at least 60 days into your overall process from end to end to make sure that you have preparation time for all of your materials, and then basically the time to deal with the regulator, where most of it is going to be waiting time, waiting for them to get your turn in line for the review of your application. So generally what we advise people to do is to try to front-end load their process as much as possible. And by doing that, really what you do is focus on the registration components that the state or the SEC require initially, so that you can get a solid application in that basically describes your business model, how you're going to charge clients, your investment philosophy, and any other particulars around your business or conflicts of interest. And with that 45-day window, after the states have the information, the waiting game starts. Well, there's your opportunity to now, as I said, pace yourself. There's the opportunity to focus on all of the other components there. So just a couple quick things I threw in here. the fees are all over the place, state to state. Some states don't charge anything, and other states are getting you for $400 per year. And I'll add the other component that they're not prorated. So for those of you that are going to be starting your business, late in December, just be mindful of the fact that on January 1st they're going to be deducting those fees again, and actually prior, from your account. The last component here is expect feedback from the regulators. They're basically as I said, they're there to protect the public. They will comment on your application, and their only mechanism for doing so is a deficiency letter. So if you get a deficiency letter in the mail or via email, don't have a heart attack. It just means that there's additional disclosures and things that you need to do to complete your application. Okay. The investment advisor representatives, whether you're registered with the SEC or the states, you need to register each IAR with the states in which they're doing business. But that doesn't mean that every IAR on your firm needs to be registered in every state in which your firm is registered. So you can be selective as to which employees doing business in which region there. But generally speaking, the requirements for an investment advisor representative is one of the qualifying examinations, the Series 65 or 66, or an exemption from that, which is typically an advanced designation or degree, such as a CFP, a CFA, a CHFC, and some others that vary state to state. And again, each state is going to vary in the information that they require from you, from fingerprints to balance sheets to background checks and other information. And a quick tidbit, depending on what geographic region you're in, and what state, the fees are going to range from 0 to $285 per investment advisor rep per year. And again, they're not prorated.